Hey everyone, and thanks for jumping back into the Cryptoverse. I figured we could go live on the channel and just talk about Bitcoin. Maybe answer some questions if you guys have any. Um, Sorry, it's been a while since I've gone live, so let me post this. All right. Okay, hold on a second. All right, don't worry. Price is not capitulating right now. I think a lot of times when I go live, people their heart skips a beat because they're like, "Oh crap, what's going on now?" No, I just thought it'd be good to do a live stream. It's been a while since we've done one, and maybe we can just talk a little bit about the markets. And obviously, we'll focus on crypto, but we can talk about other stuff too. Right now, Bitcoin's coming in at around 22,400 or so. So it has taken a bit of a hit recently. Um, and we've sort of discussed this before that 2023 is likely just going to be a really choppy year for the markets. And I do think there's going to be a lot of truth to that, right? Like I think when we look back at this year, it's mostly just going to be a choppy year in both directions. And obviously we've started off to the upside. But again, yesterday was a pretty quick move back to the downside. If you look at this on monthly candles, it's kind of interesting. This candle right here, it's sort of a sign of indecision. There's a lot of bulls that are calling for, 30K, 40K. There's a lot of bears calling for 10K. And what ends up happening is you get one of these more or less indecision candles where there's actually compelling reasons for people to try to believe both directions, right? Cyclically, there's certain reasons to think a certain way. And then based on the macro economy and recession fears are certainly reason to believe another way as well. And what happens when these forces meet is you get a candle that looks like this, where there's a huge move up to the upside. There's also a move to the downside, and then we essentially just end the month more or less at where we started. So I do think that is clearly a sign that there is some indecision going on here. One thing I am looking at, and I know a lot of people are just sort of talking about how the reason the crypto dropped is because of what happened with Silvergate. And there could be some element of truth to that, though you could also argue that crypto moves in a more discrete manner than the stock market. And what's interesting, and I was looking at this somewhat closely, if you look at the wick on the January candle, it was actually right around 24K. And then this wicked up to right around 24K before then turning red, right? So like this was around 24K, the wick, and then this wick here is also right around 24K. And then it flipped back to being red, like we wicked up, sort of sucked some liquidity in, and then we went down. Now, when you look at this chart and compare it to what's going on with the Nasdaq, you're potentially seeing a very similar thing play out, right? Like you have this January candle, it had this wick up to around 12,250, which is right where we are right now. And so then the question is this just going to be remembered as a wick? And then, within the next couple of weeks, we're going to see it move back to the downside and turn red, just like Bitcoin. I do think you could make the argument that some of the higher risk plays like cryptocurrency are a bit quicker to sort of sniff things out that are somewhat bad. If you think back to sort of, like June, remember crypto bottomed before the stock market hit its at least local low, right? Yes, crypto went lower in November, but the bulk of the move that occurred during that time frame, you could argue that crypto got to where it was going quicker, and it sort of sniffs out weakness, I think, quicker than some of the other parts of the market. And I do think it's actually a really good measure of excess liquidity. I think we have to be cognizant of the idea of Bitcoin being somewhat of a measure of excess liquidity. and therefore being able to sniff out weakness a bit quicker than other parts of the market. And it's also one of the reasons why crypto did so well in 2020 and 2021 is because there's just so much liquidity. And when you have all this liquidity, people want to put it somewhere, and we're a better place to put it than one of the highest risk plays. So that's at least something to keep in mind. And I did want to sort of touch base a little bit on, one of the videos that we put out. We've done a video series for a while where we sort of follow, .com and compare it to crypto just as like a worst case scenario outcome, which I think we should assign some relatively decent weight to, given some of the, there are similar risks involved. The stakes are very, very similar. And one of the things that is interesting, if you go back and look at, at what the Nasdaq did way back then, a prior generation of investors before us, what you'll notice is that, and we're going to switch this over to the 50-week. We've talked about this a lot, right? So it shouldn't be your first rodeo here. But the whole idea, right, is that, and I need to actually get this to the 50 week. So this is the 20 week. So this is the 50 week. So what's interesting about this move by the Nasdaq during the .com crash is you sort of came up to the 50 week, but you didn't quite make it there, right? You didn't quite make it there. You then had two red candles. Now we saw a very similar move by Bitcoin, right? We didn't quite make it to the 50-week moving average. And then we followed it up with two red candles. So a very similar type of move. Remember, both cases are coming after a 77% move to the downside, followed by a 60% rally up to that 50-week moving average. So we've seen the same thing play out with both of them. And again, with the Nasdaq, very similar type of move. You had a 77% move to the downside, followed by that 60% rally up to around that 50-week moving average. What's interesting, if you zoom in here on what the Nasdaq did more precisely, you came close to the 50-week. We didn't quite make it. We then had two red weeks, followed by a surge back to the 50-week SMA, where you had a couple of weeks where we just hung out around the 50-week SMA. And we're sort of seeing the same thing play out here with Bitcoin as well. And that first pullback off the 50-week was a red candle that was about 2.5%. Bitcoin's first pullback here was about 3%. The second candle that came after it was about a 5% move to the downside this week. Right now, Bitcoin's down about 5%. So listen, it doesn't have to play out, and I don't want to give the impression that it has to play out. But until the analog deviates, right, or until Bitcoin or total market deviates from the analog of the .com crash, I do think it's worthwhile to follow, whether it's, be that as it, while it might not be the most popular outlook. I think it's somewhat interesting how there are so many similarities between it. And, if it were to continue to play out, what you're essentially looking at is just a slow bleed from 25K, for a good part of this year. And I know that sounds difficult, but the good news is that we should then start to go back up as we get out into latter part of this year and into 2024 and the halving and moving back to quantitative easing. If you look at the CME group and you take a look at the probabilities going out, you can see that they're generally expecting the Fed to go out to 5.5, 5 3/4, but then to start cutting rates, late this year, early next year. Depends on when you check in on the website. And this quantitative easing could, of course, also correspond to Bitcoin sort of seeing that move back up to the upside. One thing I want to draw your attention to is, and I think this is important, so let's focus on this really, really quick. If you look at Bitcoin and we compare it to when the Fed paused, okay? So that's what we're going to do. We're going to go look at U.S. interest rates. We're going to compare it, okay? Let's just try to look at it in a completely unbiased way. I know it's difficult, right? But what you'll notice is that Bitcoin bottomed here back in 2018 once the Fed paused. Okay, so it was during the pause that that Bitcoin bottomed, right? It was when the Fed paused raising interest rates. And then when interest rates were going sideways, Bitcoin rallied. And then when interest rates were going down, Bitcoin was dumping. So I think this is a thing to consider. when will the Fed pause, right? I mean, like, when is that going to happen? Well, it's probably not going to happen in March. It's probably not going to happen in May. If we take a look here, right? It's likely not going to be March, likely not going to be May, probably not going to be June either. I think it could be. I mean, June could be the last rate hike. There's a possibility that June could be the last rate hike, which would correspond to sort of, getting to that final level. So June, I think, is the earliest that we could realistically see a pause. It could be as late as July, though. I mean, it could go even later, right? But I would say that June is likely going to be the earliest that you're really going to see a pause, just based on the inflation data that we're getting. It seems like there is at least some temporary form of reacceleration in inflation. This is a left tail risk that we've discussed quite frequently, in fact, over the last 6 months or so. And if there's a left tail, if there's like this left tail risk of inflation reaccelerating, which I do think is supported by some of the recent data, then you have to imagine that the Fed's not done. And earlier today, and even last week, we actually saw the CME group. There's at least someone out there starting to speculate on the Fed reaching 6.5% for the terminal rate, which seems kind of high. I mean, that seems kind of high. And you guys know me, I've been pretty hawkish myself. If we think back to last year, like, I was very, very hawkish on what the Fed, where I thought the Fed was going. And now that we're getting there, you have to wonder if this temporary reacceleration of inflation, right? See, that's 5 times fast, temporary reacceleration of inflation. If that is something that lasts a few months, then it's likely going to cause the Fed to push us too far. Okay, and this is the risk that we face, is that will the Fed go too far and push us into a recession, right? This is the argument. And again, there's a lot of discussion. There's been a lot of discussion for a long time now about a recession. Of course, there's a lot of people that would say we were in a recession back in the first half of 2022. I'm actually in the camp that we haven't been in a recession and that we're likely still not in one. But I'm also in the camp that, there's at least good odds that by the time all of this resolves itself, that we could be in one. Now, one of the things to consider here, because I really want to hone in here on these interest rates, one of the things you might notice is that Bitcoin bottomed on that last rate hike, right? The last rate hike is essentially where Bitcoin finally, hit its low and we started trending higher. During the pause, Bitcoin pumped. And then the Fed started cutting and Bitcoin dumped. So let's think about that for a minute, right? Because you might think like, well, when the Fed cuts rates, it should be a good thing for risk assets, right? And I think generally it does lead to asset prices going back up. The problem in this line of thinking, though, is that you have to imagine, like, what would cause the Fed to pivot, right? What would cause the Fed to go back to QE? What would cause them to cut interest rates? They've already said they're not going to cut rates in 2023. We'll see if they actually stand by that, but you have to wonder why. And the reason why they have no interest in cutting rates this year is because inflation is still high. Now, what's something that could bring inflation down quickly? A recession. So if we got a recession this year, I imagine they would bring interest rates down pretty quickly. So if they do that, does that mean that asset prices go up? It likely means they're going to, but in the short term, the reason that the Fed would cut would likely be due to the fact they broke something. And if they break something, the market just says, all right, the Fed's done screwed up again, and they just don't care, right? It's like, all right, well, too little, too late. You guys went too far, and you put us into a recession. And these interest rate cuts are great, but it doesn't change the fact that we had a credit event, or it doesn't change the fact that delinquencies are on the rise, and it doesn't change the fact that the housing market is going down. And a lot of people a lot of people, it's the wealth effect, right? If the prices of housing is going up, a lot of people are just going to generally feel wealthier and they're going to increase their spending. And so I think you kind of have to be careful with very quick rate cuts in terms of thinking that it has to mean anything specific. A rate pause has historically been good for risk assets, right? So even equities, you have, so you think about it like this. So we know that from Bitcoin's history, pausing was good. Okay? It was good. What happened before this time? We don't know, right? Rates have essentially just been zero for most of Bitcoin's history. So unfortunately, I can't go back and look at, 3 or 4 cycles ago to see what Bitcoin was doing when interest rates were on the rise or going down, because we just simply sat at essentially zero for a long time. The one data point that we have says that pausing was good, but we also can go look at equities and see that pausing is usually good for risk assets, right? Because people are like, all right, well, the Fed's finally not tightening anymore. We can afford to sort of gamble here, take some bets here on some short-term plays on risk assets, right? So then you have, during this phase, you get a liquidity crisis. Okay, so this is the liquidity crisis when the Fed's raising rates, right? You get a liquidity crisis where liquidity is drying up. Okay, and we know that liquidity is drying up. I mean, just look at the market as a whole. I mean, you can see just how much liquidity is drying up, especially if you think about, crypto as a measure of excess liquidity. We've seen prices go down a lot. Obviously, right now they're up, they're up off their lows, but it doesn't change the fact that the Fed has been removing liquidity from the system for a long time. Take a look at the money supply. Okay, let's go take a look at M2. And one of the things you'll notice is that M2 has actually been going down, right? This is interesting to say the least. And you might say, well, what does M2 have to do with it? Why does Ben care about M2? What does this have to do with crypto? Well, the argument, of course, is, well, the money supply is going to strongly influence asset prices, whether you like it or not. Okay, so take a look at M2. It's going down, right? This is not something that we've really much experienced, too many times before, the fact that the money supply is going down. Now, again, why does that matter? Well, why don't we go take a look at the S&P 500 divided by the money supply? And you tell me, right? You look at this chart, the S&P divided by the money supply, we've been at the same level. We were at the same level that we're at right now back in 1996. In 1996, right? I was 6 years old at the time. In 1996, the S&P, as a function of the money supply, was at the same level as it is today. So it's clear to a large extent that asset prices are very dependent on the money supply, whether you like it or not. And this becomes an issue when the money supply is going down, right? So if the money supply is going down, I mean, it doesn't mean on any given day that asset prices have to go down, but it does mean that you're fighting a very difficult battle. Now, eventually, we're going to see M2 expand again, and it'll make it a lot easier for asset prices to go up in a sustained way. But we've had so long where M2 was just going up, and now M2 is going down. And so you'd have to imagine that would have to reverse course at some point. Okay, so you have a liquidity crisis here where liquidity dries up. And what happens during a liquidity crisis, during higher interest rates? You see all the zombie companies come to the surface, right? The zombie companies essentially, they get exposed for who they are and for the risks they took, and that's what you see happen, right? The zombie companies get exposed, and you have liquidity issues, and there's contagion events because all these companies are sort of intertwined, or at least a lot of them are. So you first have your liquidity crisis, which generally leads to these bear markets. Well, not always, but for crypto, it certainly has, right? I mean, the stock market is not the same. I don't think it's as much as crypto is when it comes to sort of being a measure of excess liquidity. But you see the same thing over here. So then at some point, we're going to get to this phase, okay? The pause. Everyone's been talking about the pause, Fed pausing forever. Everyone's been talking about a Fed pivot forever as well. But the pause would notably be some type of change in monetary policy. And during a pause, there's a good chance that risk assets could rally from wherever they are. Now, here's the thing. This is the thing we have to consider. What happens, or how long is the time between the pause here and lowering rates? Because Bitcoin shows us that it can rally after the pause, right? We also know that the pause likely not come until at least June, maybe not till July. Okay, it's probably going to be mid to late summer at the earliest, and they could go higher if they need to. Um, if I'm being completely honest, though, I struggle to see. I mean, again, coming from a fairly hawkish viewpoint, I struggle to really see them going, much above 5.5. Like I could see 5.75 and maybe 6, but I feel like they're really pushing their luck at that point. And if they make it there, it's hard to imagine we would avoid a hard landing. And here's why. Here's why. If we're under the impression that crypto could rally after the Fed pauses, which I mean is still likely half a year away, what happens when the Fed cuts? Because we also know that crypto doesn't do well when the Fed cuts. And what would cause them to cut is likely a recession, okay, or breaking something. So then what's interesting to me is how long is this phase? Because what happens if the time frame between the last rate hike and the first rate cut isn't that long, and it doesn't give crypto enough time to really get off the ground again and get moving? That's where that's where you could have some potential issues. And furthermore, you could make the same case with equities as well. So what happens between the last rate hike? How long do we have between the last rate hike and the first rate cut? And if it's not very long, then that could become an issue, right? Because that means you drain liquidity for so long, and then before you give asset prices time to breathe, then the Fed's cutting because they broke something. So I'm actually more so in the camp of, and I have been like, let's just try to get to where we're going, rather than spend too much time. Be that as it may, I don't really foresee the Fed getting too much more aggressive in their sizes of the rate hikes. I do think 25 basis points is going to be the most likely outcome. I mean, yes, you could make a valid argument that they should go for 50 basis points, but if the reacceleration of inflation is transitory, which certainly could be the case, and when I say transitory, I mean like over a 3 to 6 month period, then getting too hawkish could be very detrimental, in 6 to 12 months. So I would say most likely outcome here is just going to be 25 basis points, another one, and then another 25 basis points in May, and then another 25 basis points in June, and so on and so forth, until they get to whatever restrictive level that they want to get to. And then at that point, I imagine they will have to seriously consider the implications of going too much higher. One thing to consider, and this is something I wrestle with myself, if you look at it, U.S. inflation versus interest rates, you'll notice that normally during a rate hiking cycle, they get the Fed funds rate well over headline inflation, which they have not yet done. I mean, you can see that normally it takes in the Fed funds rate to get above it to really bring inflation back down in a sustained way. And yes, inflation has been coming down recently, which is a good thing, and we're not trying to minimize that. I don't really think we're going to see higher levels of inflation this year than the peak of last year, although it's certainly possible if we had any types of geopolitical events take place. But if it is going to come back up, I would have to imagine that you're likely just going to be looking at a lower high on inflation. This would be my guess, right? But that could be enough to make the Fed a bit too hawkish, a bit more hawkish than they otherwise would need to be. You have to remember one of the things we've said before, right? And that's that these changes to monetary policy can take 12 months to really be felt in the overall economy. Now, there are some aspects of that that's not true. I mean, interest rates, or sorry, 30-year mortgage is back above 7%, 30-year fixed. So it's not like you had to wait a year to see that. But in terms of how it affects businesses, and a lot of businesses have loans that might come to maturity at some point this year, it can take about a year before you really feel the effects of the higher interest rate of these higher interest rates. And the truth is that the Fed didn't really start hiking until March, right? So we're just now getting to the point where you could argue that we're going to feel the first effects of the rate hikes and how it affects businesses. Now, we also know that the S&P has basically just been going. I mean, if we're honest with ourselves and we take a look at this, from sort of a broad perspective, the S&P has kind of been stuck in this range for almost a year now, right? Where it hasn't really deviated too much out of this range between, say, 3,500 and 4,200, right? We've sort of just been in this range. And so, these companies, these businesses have cut costs. They've laid people off, and by laying people off, of course, you're going to cut costs. I'm sure they've cut costs in other ways as well. Um, this is a way that you can kind of keep things moving. You can continue to be profitable, and so on and so forth. But I suppose the problem becomes is like, there's only so long that you can do that before it's going to really start to affect the bottom line. Um, and once it starts to affect the bottom line, that's when you get asset prices starting to reflect, oh, okay, well, the Fed hasn't pivoted yet, and there is that recession risk. So, right now, I think that the S&P has certainly still been in this range for a long time. We've talked about looking at this bear market for the S&P 500 in the context of other bear markets. And if we go take a look at this bear market, so the 2022 to 2023 bear market, we're not even sure yet if it's also going to be a 2023 bear market. Have to put in a new low, but assuming it does, and you look at the context of history with prior bear markets, we're pretty close to the upper bound of what prior bear markets have done that still stayed as bear markets, and we're not on the path to recovery. So you can see where we currently are. We actually sort of turned over at around sort of these same levels that we've seen it happen in the past. I mean, look at, instead of looking at it in the context of all prior bear markets over the last century, look at it compared to the dot-com crash. And you can see that this is when around this time is when it rolled back over. So I do think we need to. I do think this market certainly calls for a lot of flexibility, and sometimes I see people that have a lot more experience than me in the market, and they'll say they went through the dot-com crash, and I didn't, right? I didn't go through the dot-com crash. I can look at it on paper and say, oh, that looks bad, right? I mean, we can look at this and say like, wow, like imagine going through that. But you look at this and you don't feel it, right? You don't feel the pain that the people experienced during that time. Just like 20 years from now, when people look at the Bitcoin chart, they're going to say, oh yeah, that looks pretty bad, right? But it doesn't mean they felt it. So I can't really say that I felt the pain of the dot-com crash or the financial crisis or the bear market from 73 to 74 or 87 or 46 to 49 or all these various bear markets. Like I haven't really experienced a lot of this stuff, and I do know a lot of people that do. And a lot of them are actually of the opinion that these are some of the most polarizing times and some of the most difficult times to sort of assess what's going on. And you look around on crypto Twitter, crypto YouTube, there's all sorts of arguments for the bull case and the bear case. And there's equally compelling, and there's compelling reasons to sort of believe both sides at various points, depending on, the expectations to the terminal rate, the cyclical point of view as to where we are in Bitcoin's cycle, and so on and so forth. One thing to remember, though, is that, during Bitcoin's cycles, one of the things we typically see, and we saw this in 2015, we saw it in 2019 too, is that we kind of get ahead of ourselves at least one time. And it happened in 2019 and it happened in 2015. It happened in 2015 twice, right? We got ahead of ourselves, we came back. We got ahead of ourselves, we came back, and then we rallied out into 2016. 2019, the same thing, right? We got ahead of ourselves and then we came back. And then we rallied. But in both cases, in 2019 and 2015, it was a choppy year where the market kind of sucked, right? It just kind of sucked. Everyone got sufficiently wrecked. And then once we got out to the next cycle, we were able to move back up again. So I would say be careful, right? Be careful this year. Try not to lose all your money trading both different directions. I think you just have to come up with a plan and stick to it, and just be patient. But this is something that I think is at least worthwhile to consider. So, we'll still, of course, continue to follow what Bitcoin's doing here. If it's going to just get rejected here off the 50-week and we come back in, then we'll continue to follow the analog with the dot-com crash. If it deviates, then of course we'll have to stop and pivot the sort of the analysis to something else. But so far, it's still sort of following course. And very similar thing could be said about total market cap. Very similar thing could be said about Ethereum as well, getting that rejection off of the 50-week SMA. One thing that's kind of scary, and I don't know if you guys have noticed this before, but take a look at the 50-week SMA for the Nasdaq. I actually did a video on this, so apologies if you've seen this before. But you take a look at where the Nasdaq peaked in March of 2000, and it was basically at 48.16 or so, somewhere in that level, right? 48.16. And then you take a look at where it rallied up to the 50-week. It was around 17.10. Okay, and where did this rally start that took us into the 50-week for the Nasdaq back then? Well, it started at about 1100, no, 1088, right? 1088. Are you picking up what I'm throwing down here, right? I mean, it looks like Ethereum, right? Like it literally looks like, if I didn't know any better, I'd say this is the Ethereum price. I mean, we know that, Ethereum went up to 4,800, like, went up to 4,800 over here. So 4867. So Ethereum went up to 4867. There is a deviation. We'll talk about the deviation in this video, but let's ignore it first, and then we'll talk about it, I promise. Where did it rally up to at the 50-week, right? 1745. Where did the rally from this level start that took us into the 50-week? It started at 1070. 1070. So, you sort of flip back and forth between the Nasdaq, like 4,800, 1,100, 17, and Ethereum, 4,800, 1,100, 17. And it's kind of the same thing, right? Like, there's a lot of elements there's a lot of similarities between these two charts that are probably not just worth ignoring. Now, there is going to be a deviation here, and we should talk about it. And that deviation is the fact that the Nasdaq put in a lower low here, whereas Ethereum did not. Okay, so Ethereum sort of capitulated back in June, and then this ended up being a higher low. But for the Nasdaq, it was a lower low. But the point, though, is that if you look at the drawdown from the all-time high for both, it's about the same from the rally to the 50-week, right? I mean, this is about a 77% drop before Ethereum rallied into the 50-week, just like it was for the Nasdaq. I mean, you could argue that there's some element of, there was just a crazy capitulation because of what happened with Celsius and some of the other major centralized platforms that went under. But again, there are a lot of similarities. There's some differences as well, but I think it's worth pointing out. And if you're curious, where did the Nasdaq bottom? It actually ended up bottoming at around 795. So if we were to put that on the chart here, you take a look at where the Nasdaq bottomed right here. It was around 795 or so. Where has Ethereum gone so far? Did Ethereum go to 795 already? No, it went down to around 880. Okay, so Ethereum went to 880, not 795. But that's something that's interesting to look at. Now, here's where it gets interesting, because, I mean, of course, we could talk about the bear case all day, and you guys know I've been, I tend to do that, right? I mean, I'm not, let's be real, right? But what do you think? Like, do we just look at the bear case, or do you also look at the potential later on? And yes, I think it's worthwhile to say, okay, well, if it does play out like this, what does that mean for Ethereum, right? What does it mean in the future? As you guys know, I'm pretty bearish. I've been bearish on Ethereum for like 13 months now or something. And the main reason is because I'm compelled to continue thinking that Ethereum needs to make its way back home to the fair value logarithmic regression trend line. But here's the thing. The low on the Nasdaq back in the dot-com crash was 795. The fair value of Ethereum fit to quote-unquote non-bubble data is 785. So it's getting pretty close to what you would consider to be the fair value of Ethereum, again, fit to that non-bubble data where you fit it to regions that's not considered part of a bubble. So but only about a $10 difference. So if it gets down there, we'll have to talk about that. But here's the thing. You can look at this and you can leave it at that and you can get all upset and depressed about it. Or you can say, well, what came after it? What came after this? Look what the Nasdaq did after it. And I'm fully expecting Ethereum to survive whatever storm is coming its way, assuming we get one. I know some people think that the storm is over, and I think it's fine to think that. I mean, it's a market, right? We're going to disagree on things. I wouldn't get too upset about it, right? It's fine to disagree. Look what came after it, though. Where did the Nasdaq go to in November of 21? Right? Where did it peak at? 16,000. Right? 16,000. So again, you can look at this and get upset that I'm saying that Ethereum could go lower, or you could also look at this and say, well, if it does go lower, what came after it for the Nasdaq, right? And you could argue that this would await us. Now, here's something interesting. I don't really know how to think about this, but I'll share my thoughts on it here with you guys, just to sort of explain some of the things I've looked at. Does this have to take place over more than one cycle, or does it take place over one cycle? Okay, And what I want to do is I'll provide some evidence for both directions, right? So I mean, obviously we'd all prefer for it to happen in one cycle, but here's one way to look at it. Okay, so you could argue that what if it takes place over more than one cycle? So let's start with the more boring case first, and we'll talk more about the more exciting case. Let's say that it takes place over more than one cycle, and the next cycle, Ethereum does something like this, where after it hits 795 or 700, 600, whatever, it rallies on up and it gets rejected at around 2200. Okay, and then it comes back down. Well, what would cause it to come back down? Like, why would the rally get tempered right here? Well, you think back to what happened in 2008. We saw the housing market collapse, right? Well, it's a good thing the housing market's okay today. It's not really, right? There's a lot of reasons to be kind of concerned about the housing market. Higher mortgage rates are not going to be doing anyone in the housing market any favors. But we also know the housing market takes a long time. I've had two different guests on the channel that are experts in real estate, and both of them, I believe. So we've had two separate people, and they're both of the opinion that by 2025, 2026. So I think one of them thinks the housing market's going to go higher and then collapse in a couple years. And then one of them's of the opinion that the housing market's just going to slowly bleed from here for the next 2 or 3 years. But regardless, that would be the case that, that could temper risk asset expectations in the next cycle if the housing market collapses and we don't see that. But here's a case for the other side. Okay, so that's a case for the more conservative side, but let's make the case for the other side as well. And the case for the other side as well is that crypto moves a lot faster than these traditional markets. And look at this similarity. We talked about the similarities here between the Nasdaq and Ethereum, right? 77% drawdown from the high to the rally before the 50-week SMA, potential rally out or potential rejection off the 50-week SMA, both peaked at 4,800. Both just got rejected at the 50-week off of about 1,700, 1,750. But what's interesting is where did Ethereum start this cycle, right? Let's just say where it started back in March 2020. It started at about $100. About $100, okay? So keep that in mind. Started at $100. And it went to 4,800 in what? A year, right? 100 to 4,800 in a year? Where did the Nasdaq start this rally that took it to 4,800, right? Where did it start? Started at $100, okay? So I guess it's an index. I shouldn't be putting the dollar signs, but you get the idea, right? You get the idea here that this started at 100 and it went to 4,800. But here's the thing, this took place over how many years? 85 to 2000. So this rally by the Nasdaq took place over 15 years. Okay, so yes, I mean, you could look at this and say that the next cycle for Ethereum would have to go through a cycle like this, where the next cycle's returns are tempered by the real estate market if the real estate market crashes. And you could say, well, look, I mean, this took place here. Once it bottomed in 2002, we then bottomed again in 2008, so about 6 years later. So you could argue that, okay, well, maybe crypto has to have tempered returns. But the other side of this is, well, look, the Nasdaq took 15 years to do what Ethereum did in 1 year, right? So this move here from 2002 to 2021, I mean, you're essentially talking about about 19 years or so, right? So from that sense, you might argue, you might try to make the case that a move like this could just be sort of en route to another mania phase within only a couple years or something, and that maybe you see something like this, but it could just be a drop where Ethereum rallies back to 2K or something in 2024, and then has some type of crazy drop back to 1K, and then rallies on from there. But it's just something to consider. We're not gonna spend all our time on this, but it is at least something that I thought was interesting, how you could basically look at the same levels on the Nasdaq and make the comparison to Ethereum, and it's essentially the same thing. The only question is does Ethereum sort of finish this out and go back home like we've talked about before the next rally can begin? And I'm of the opinion that it will. I could be wrong, right? And I've been wrong about plenty of things. You guys know that. The receipts are there. But there's certainly a chance that Ethereum will come back home before starting the next rally. And arguably, we have 2023 to figure that out. I mean, 2023, I think, is just going to be a relatively choppy year. Deviations to the upside and the downside. If you were to take a look at crypto and take a look at our return as a year-to-date return, year-to-date ROI, and we were to isolate 2015. First of all, if you isolate 2014, 2018, and you take an average of those 2 years, right, 2014 and 2018, you add a series to that, you get a bear market that ends right here. Now, remove 2014 and remove 2018 from the equation and take the average of 2014 and 2018. What do you get? You get where the 2022 bear market ended up at the end of the year, right? Like that's where it ended up. So, hey, it was a pretty good thing we followed this last year, right? I mean, look, a lot of the bear markets are really similar, and a lot of the years after it are really similar, right? 2015, 2019 were very similar to each other. Perhaps 2023 will be the same. And, a lot of people ask, well, does that mean the bottom's in? Look, 2015 had a new low, okay? Even in January, there could be a new low. Also in 2015, on some exchanges, we put in a new low in August in 2015. So I would be somewhat open-minded about that, and I don't really think you need to get the pitchforks out just because we're saying, hey, like it could happen, right? If we go into recession, it could happen. You don't need to fear it. Just plan for it. And if it doesn't happen, then so be it. You have cash earning 5% in some CD rather than just doing nothing with it. But I think you plan for it, not financial advice. You plan for it, and if it happens, great. You saw it coming ahead of time. You plan for it. If it doesn't happen, yeah, congratulations, you're now a fixed income investor. So the other thing to look at is let's take a look at the next one. You have 2015, you have 2019, and let's take an average of that. So let's take an average of 2015 and 2019. And you do that, you add a series, you get something that looks like this. Now, if you hide 2015 and you hide 2019, and this is what the average looks like. So this is the average of 2015 and 2019, and you overlay 2023 on here, it looks something like this. So if you were to take the range on 2015 and 2019, and we did a video on this at the beginning of the year, right? The downside deviation average as a function of time was about 25% to the downside from the yearly open. The upside deviation is about a 2x from the yearly open. If that's the case for Bitcoin, that means the deviation to the downside is around around $12,000, but the deviation to the upside is around like $31,000. So you could even make the case that Bitcoin could stay within this range for the entire year, and it's still doing what it's always done, right? So like if Bitcoin stays within the range of 12K to let's say like 31K or even 32K if we take twice the yearly open, which was what? It was like $16,000. So 12K to 32K, that's good chance that's the range, right? And if it is the range, we're just doing the same thing that we've always done, right? And we're quabbling over these these moves. We think back to, because I've had a lot of people ask me, well, when's the accumulation phase of a lifetime going to occur for Ethereum? Some of the first videos on my channel are about that. And here's the thing. First of all, it doesn't usually occur when everyone's asking me about it, right? There's always a chance that you could always make the case. I mean, plenty of people have made the case that this is the bottom for Ethereum back in June of 2022. But the counterpoint, okay, the counterpoint is this. What about the idea that Ethereum, if you think back to 2019, right? Q3 and Q4 were not great. Okay, so what if the same thing happens this time? And we just simply go lower because the next time Ethereum will be unlocked, all the ETH will be unlocked, and people can actually sell. Some people say it's not going to have any effect on the price. The counterpoint to that is, well, right now there's people that can't sell, okay? And once they can sell, that number is going to be greater than zero. So it'll have likely some effect. I mean, the question is it going to be enough to materially affect the price? I don't really know, honestly. Like I would say I would lean towards no, but that doesn't mean there's not the recession risk. And if liquidity dries up, I think that's probably the bigger risk than just Ethereum, the Ether unlocking. But the other thing I think that you kind of have to take into consideration here, let me just check the prices because I haven't looked in a little bit. Okay, so everyone talks about crypto decoupling from stocks. It's decoupling now, but not in the way that every time people talk about crypto decoupling, it usually decouples in the way they don't want it to, because you have stocks going higher. You have the S&P at almost 4040, and you have Bitcoin still unable to get above 22.3, 22.4. So we'll have to keep an eye on that. But if you think out to kind of when we made the accumulation phase of a lifetime videos for ETH, it was back over here, right? And then what came after it? A 40x move? A 50x move? Right? A 50x move from the low. We talked about this. We talked about it when Ethereum was $100. We talked about it was $200. We said the Ethereum accumulation phase of a lifetime. And even here, when it was 400, we said the reaccumulation phase of a lifetime. So then, I've had a lot of critics, and I see you guys in the comments, and it's okay. I've learned to live with it. But every time Ethereum rallies, everyone gets upset. It's like, well, look, this rally here that we led into was a 50x rally. And now people get upset anytime it goes up 20%. In crypto, a lot of us come for the big moves, right? Like the 30x moves, the 40x moves. When things are just so grossly undervalued that it doesn't make sense, right? You come for that. These other moves that that are occurring. Like you can make money on them, but it's not the same. Like this is not the same as what this was, right? This led into a 50x rally, and I'm not saying that this one can't, but this was also, again, it was lower down. Much lower down from the highs. Yes, you could argue diminishing losses, but we also spent over a year in this range before going back up. So I've said before, the concession that you make if you don't want to go down to the lower logarithmic regression trend line before the next sustained bull market is that, well, you go sideways long enough for the regression trend line to catch up to us. And it is, right? It is slowly catching up. Back over here in June, the fair value of ETH was at like $600 according to this trend line. And now it's going on, getting closer to $800. So that's at least something to consider, as you continue to navigate this. I'm curious here what the S&P is doing, because the S&P is almost back to 4040, which I know has been a significant level in the past. One thing that to keep in mind, and I was talking about this earlier today, is that a lot of times in March you'll see some strength within the first week or so, and then oftentimes that rally, that strength can sort of fade in the second and third week. It can also pick back up by the end of March, but I will continue to watch this here to see what the S&P wants to do. Is it going to do something like this where we just get like a 4-day rally for like the first week of the month, and then we just sort of give it all back, late next week or something? It's certainly a possibility. And we'll need to keep an eye on what the S&P is doing here. But what's fascinating right now is the fact that the S&P is going higher and crypto hasn't really moved. So something to consider when you think about like diversification of assets, right? There's always the idiosyncratic risk of crypto, and if you want to tie the weakness right now of crypto to Silvergate, even if that is the case, that's an argument of this is why it's good to be diversified. Because what happens if the idiosyncratic risk of a specific asset that you like, or an asset class that you like, something bad happens that you don't foresee, like Silvergate or whatever the next thing could be, that doesn't mean you want your entire portfolio to suffer. So by having exposure into various asset classes, you're able to sort of, just because one asset class doesn't do that great, doesn't mean that you have to sit there and watch your entire portfolio go down. If you go take a look at correlation coefficients between the total market cap, Bitcoin, Ethereum, Apple, Amazon, Netflix, Alphabet, Meta, DXY, gold, silver, platinum, palladium, nickel, and copper, you can see that crypto is all highly, at least the major ones here, total market, Bitcoin, and ETH, they're all highly correlated to each other. They're also at least somewhat correlated to these tech stocks, Apple, Amazon, Netflix, Amazon, and Meta, but they're not as highly correlated, so I think there's still justification for having both, and they're negatively correlated to a lot of the precious metals and to the US dollar currency index. And so this is why I think like a good investor, not financial advice, probably has exposure in various asset classes, and they change the weights of their exposure depending on where they think we are within the market cycle. It's at least my opinion. Now, I want to talk about something, and then I'm probably not going to stay too much longer. But one thing that I've sort of faced a lot is, I've said altcoins don't really make sense during this phase, and I'll continue to say it. And yes, there's some altcoins that have done well, but I will remind you once again that a lot of these continue to just sort of slowly push lower. You take a look at ADA Bitcoin; it put in a new low today. This cycle, right? For at least this this down move. Yes, it went lower last cycle, but look at ADA Bitcoin. I mean, it literally went lower today. So this is why I keep saying, right, exposure to the cryptoverse, in my opinion, should be mostly limited to just Bitcoin, because Bitcoin's mostly going to outperform the rest of the market. There's always a few altcoins. Thank you. I understand that. We said that at the beginning of 2022, that there's always going to be a few altcoins that outperform. We put out a video in February 2022 saying, how do you prepare for the bear market? You stack cash, right? Cash is king, and you stay away from the altcoin market. You can see that ADA Bitcoin continues to go down. Now remember, a lot of altcoins can bottom on their USD pairs before they bottom on their Bitcoin pairs. That doesn't necessarily mean they're a great buy even when they bottom their USD pair, because if you are buying an altcoin over Bitcoin or say over Ethereum, because I don't really consider ETH an alt, if you're buying an altcoin over the blue chips, you're essentially saying, well, I think this altcoin is going to outperform the blue chips. If you don't believe that, then why the hell would you buy it, right? You're taking on more risk for potentially less reward. So as long as the altcoins remain in downtrends on their Bitcoin pairs and on their Ether pairs, then why take the risk on the altcoin market? And that's why I would say like ADA Bitcoin is, has been in a downtrend for a while. Solana Bitcoin is also in a very textbook downtrend. Look at this. Every single low ends up acting as the next resistance level, right? Like this low was this next resistance. And then this low here was this resistance. So the argument is, well, maybe this low is just going to be a future resistance, right? And to go back to ADA Bitcoin, remember ADA bottomed against the US dollar, at least temporarily, back in December of 2018. The ADA Bitcoin valuation still fell until August of 2019. Now, ADA USD even put in a new low in March of 2020. Bitcoin USD and Ethereum USD did not. But again, you see ADA Bitcoin in a downtrend. You see Solana Bitcoin in a downtrend. You see Polkadot Bitcoin in a downtrend. Link Bitcoin, I've been following this for a while. It's maybe trying to put in a higher low here. So possibility, I mean, it did do well back in late 2018, 2019. So possibility that the downtrend is over for Link, but a lot of these continue to sort of slowly bleed. Avalanche Bitcoin, again, in a downtrend, right? A lot of these are in a downtrend. Matic Bitcoin is not. There's always a few that outperform, but arguably it's also just stuck within this range between around 1,700 Satoshis and 7,000 Satoshis. It's been a pretty good move, but it hasn't really made a run to new all-time highs. One of the big ones is BNB Bitcoin, which I've been saying I think it's going to continue slowly down, and I think you're just slowly seeing that play out. I mean, BNB Bitcoin from this high over here is now down about 35% or so. So I think with BNB Bitcoin, the argument here is that it's likely, in my opinion, going to continue going lower, slowly but surely. But this is going to likely make the Bitcoin dominance go higher. And of course, there's the elephant in the room is, well, what is going on with ETH, right? I mean, Ethereum is still sitting at around 0.07. One thing I was looking at, if you take a look at the monthly 20-month SMA, I remember we talked about this back in 2019 and 2020 a lot. I mean, I haven't talked about it recently because it hasn't been relevant. But back over here, it was the 20-month SMA that sort of kept Ethereum's Bitcoin valuation from breaking out into a bull market. And so far, every time we've broken down below it, we caught back above it the following month, or it was only just a wick. Now we're actually seeing more than one monthly, where we got a monthly open and close below the 20-month SMA. I would argue it's more likely to start rolling over because in the end, in my opinion, even the giants will fall. What else? We've talked about a lot. Yes, the Bitcoin dominance has taken a hit today. I'm sure these comments are going to be everywhere. But I will remind you that it was only a few months ago when everyone was calling for 20%, 30% Bitcoin dominance. And now that it's been going higher again, everyone gets kind of quiet on it. Yes, it's at 43 to 44%. This includes stablecoins. If you exclude the stablecoin market, so if we just go exclude the stablecoin market, which is relevant to do, right? I think it's relevant. Say this is what it is with stablecoins. This is what it is without. Without stablecoins, Bitcoin dominance at 48.41%, and it's been moving higher since May of 2021. So to me, when I consider the alt Bitcoin pairs, they're mostly bleeding. Yes, you can cherry pick, but most of them have been bleeding for quite a long period of time. And this has just been continuing to put in higher lows. I think it's slowly building out a base. If you overlay, say, like a 30-day SMA of it, you can see this base. It's being slowly built out. Look at a 50-day moving average of this. It seems like it's still building out a macro base to continue moving higher. If you go back to just a simple one and you overlay the total market cap risk, or let's overlay the summary risk, you can see, I mean, the alt season that you guys are looking for is this, right? It's this type of a move. But I would argue that that type of a move is more likely going to occur after the dominance goes back up to the upside for a while, right? And it's not that high right now. I think once you see it get higher, then you can start to hopefully prepare for that. But until that happens, I don't think it's the most likely outcome. So that's just something to consider. If you take a look at the total market cap, you can see that we're currently coming in around 47% undervalued. If you overlay the total summary risk over this chart, you can see where we currently are. I think we're just going to be scraping the lows for a while here, probably remain below the fair value for most of this year. If we go above it, like 2019, I think it'll be relatively short-lived, but that's where we currently sit with that. Yeah, I mean, look, there's other charts that we could certainly talk about, but that's most of it. A lot of the charts that that people are using to call for 30K and 40K, they're there, right? I'm not going to say they're not. They're there. It's just a matter of, do you think that Bitcoin can go to 40K when the Fed is actively trying to make it not, right? Like when the Fed is actively trying to get inflation under control. And so this was not a battle that the Fed was doing back in 2019, not nearly to the same extent. And so I think you kind of have to weigh that. Like, yes, there's some cyclical indicators that that lean good. I mean, like, look at the 1 year ROI of Bitcoin. We talked about this for like all of 2022, that you're likely going to see it go down to around 0.2 by the end of the year, and it did, right? And it did. Take a look at a few other ones, right? Look at the hash ribbons. It's flashed again, although it also flashed earlier and it was a false signal, right? It flashed again recently. So usually that's a good thing. And this is with price momentum included. Take a look at the MVRBZ score. Still at a relatively low level here. It goes back to 2015. It can easily come back down. Even in 2019, 2020, I mean, it eventually came back down. So look, the argument is that what normally happens in the year after the primary bear market years of 2014 and 2018 is you get a choppy year to the upside and the downside. Everyone gets ahead of themselves. We then come back in, and then we get to the halving year. We get to QE. We get to lower interest rates, and then we take off again. It's probably just going to be that simple, is my guess. Is once we get back to QE, we can actually start to have the discussion about a more sustained bull run. But until that time, I think you have time to figure out what strategy you want to go with. How do you want to weight your portfolio? How much cash do you want to have on hand in case we do get another drop, which is a good possibility considering the macro headwinds. It doesn't mean it's going to happen tomorrow. It might not happen until the third quarter or the fourth quarter, or maybe early next year before the halving. I mean, the March 2020 drop occurred 2 months before Bitcoin's halving last time. So that's what I think you have to prepare for. I mean, the evidence to me still says we're not in a recession, but the evidence would also suggest that you could see a recession in the latter half of this year or early 2024. So that's kind of where I am right now. Thinking about the overall market. I think we have to recognize the risk here of a potential recession later on this year, early next year. How do you plan for that while also being hedged? And for me, as you guys know, I navigate crypto right now with basically just Bitcoin, because I think that the altcoin market's going to keep bleeding against it. I think the dominance of Bitcoin is going to go higher, and so Bitcoin is king in terms of the cryptoverse. But I think cash is also a good thing to have on hand throughout this year, because I think there's going to be plenty of opportunities to prepare for the future cycle. Okay, so that's where I stand. Hopefully this video has been useful to some people. I just wanted to do a live stream because it's been a while since we did one, and I feel like they're at least somewhat useful, although maybe not as useful as I want them to be, because I think I just kind of ramble a lot, and maybe it's not so interesting. If you guys have any questions, maybe we'll answer a couple questions and then we'll get going. Someone says they got sufficiently wrecked already. We'll let the market be the judge of that. Someone says the halving of Bitcoin in 2024 will be a game changer. I do think there's some truth to that. You essentially have two camps here, right? You have the camp that says the halving doesn't matter, and that it's all about liquidity, and then you have the camp that says it's all about the halving and the macro doesn't matter. I'm in between. Okay, like I think that Bitcoin and crypto is a measure of excess liquidity, especially when the utility of the cryptoverse is still sort of being figured out, if we're being honest. But I also think that the halving is a great narrative, and it does lead to, I think, a lot of excitement in the cryptoverse. It did it in, it did it in 2020, it did it in 2016, and it did it in 2012 as well. So why shouldn't it in 2024? It probably will. Coincidentally, it'll also probably correspond to easier to looser monetary policy. So I think you're right. I think that the halving will play an important role. I also think that cheap liquidity, access to cheap liquidity also plays an important role. And coincidentally, we're probably going to get both around the same time. What other questions? Someone says Bitcoin dominance goes up, but price could go down. The argument with the dominance is that it should go up. It should trend higher no matter what. And again, it has been trending higher no matter what, especially when you exclude stablecoins. So that's the argument, is that no matter what direction the Bitcoin USD valuation goes, the dominance should slowly trend higher. And we've seen that occur. If you exclude stables, it's been going up since May of 2021. If you include stables, it's been going up since September of 2022. But we'll see if it can continue. I think it'll continue on for a good part of this year. Looks like the S&P is now at 4040. So 4041. So I know this is an important. So if it makes it up to where it was back over here, it would be up at 4094. You can see these months for the S&P have sort of all been capped at around 4100, except for this one wick higher. Someone wants me to say happy birthday, Maisie. Is there some YouTube channel you follow? I mostly follow non-crypto content, if I'm being honest. I spend enough time talking about crypto myself to want to make it like the only part of my life. So I actually I watch a lot of other non-crypto content. Would you say it's a good time to dynamic DCA Bitcoin? So the argument with dynamic DCA is you just do it according to the risk levels. You can use your own risk metric. You don't have to use mine. You can create your own, and the whole idea is you DCA when the levels are low, and dynamically if you can, meaning getting in heavier when the lower the risk you go, and then putting in less the higher the risk you go. So that's the general idea. That's how I've been successful in crypto in the past, and it's just slowly putting it in and then just kind of and waiting. And if we do go to low risk levels, that's when you're ideally putting in more than when you're at higher risk levels, right? This is the argument, right? This is how I've done it. What if the Fed cuts rates because inflation comes down and not because they break something? Will that not be a crash after cutting rates? That's a good question, and I think it's worth addressing that. So the question is what if the Fed doesn't break something and inflation starts to come back down and then they pivot? Yeah, there's a chance that this happens. The reason why I don't think it's the most likely chance is because normally it takes a recession. A lot of times it takes a recession to actually bring inflation back down. So the idea that we're magically going to get inflation back down this time without going through that seems a bit too optimistic. But the argument in the favor is you're looking for what a lot of people would call a soft landing. And we've had, you could take a look at this bear market and compare it to the 46 to 49 bear market. So this is the S&P 500. This is what I would call a soft landing, where we just keep doing what we've been doing, right? We just scrape, we sort of bounce up and we scrape the lows for the next year or so, maybe more, maybe two, and then we go up, right? I mean, take this to the next peak and you see what happens. I mean, this is the thing. We always look at it down here and everyone gets so depressed about it. and then you just compare it to the next peak, and it's like, well, it doesn't really matter, right? You had 3 years over here to get into the market, and then it took off. Okay, so that's the soft landing argument, and maybe there is more. We should maybe put more weight to it than I previously implied, and maybe the reason is just because of all the excess liquidity in the system from all the money they pumped in. So it's a worthwhile consideration, right? Like you have to consider that there is a possibility of a soft landing, but a soft landing would actually likely be a more painful scenario for a lot of us, okay? And you might say, well, why? Wouldn't a soft landing be better? Because we don't want to see, you might say, well, I don't want to see the market drop, 20, 30%. Well, the question is, would you rather go sideways for the next 2 years, right? Like this, like 46 to 49, which was also coming out of a period of high inflation? Would you prefer to do that? Or would you prefer to have a hard landing, like coming out of the, during a period of high inflation during 73 and 74, where you get a hard landing and it's over, right? It's over. So a hard landing would basically be what I would say is it happens probably sometime later this year and it's over with. And we just go up from there, right? Take it to the next peak from 73 to 74 after the drop. I mean, it was a really nice rally back up to the upside. A soft landing would look like this, where we just sort of scrape the lows for a long time. So it's like, what do you prefer? Do you prefer to rip the Band-Aid off and get it over with and then trend higher? And we all think, we all just like get happy about, oh, the market collapsed, now we can go back up. Is that what you want? Or do you want a soft landing where we don't really get that upside potential, but instead we just sort of scrape the lows for the next year or two? So I think there's advantages to both. The advantage to the soft landing is that you're not going to be as tempted to capitulate your position at the bottom because we're just within a trading range. So that's the advantage of that. The disadvantage is that we just go sideways for like 3 years. I mean, we've already gone sideways for over a year. So the disadvantage is that we might go sideways for another year or two before coming out of it. The advantage of a hard landing is that you just get it over with, right? And if you have cash on hand, a hard landing is fine because you can get this generational opportunity. The downside to a hard landing is, depending on your exposure to the market, it can sting a lot. It can hurt. Again, you take a look at the financial crisis. Sorry, trying to get this one. So if you take a look at the financial crisis, it hurt a lot, right? The market dropped like 50% from the peak. But look what came after it, right? Look what came after the financial crisis. Yeah, it sucked. And, if this happens again, we all get wrecked. But if you also have some cash, if you're planning for this potential outcome, then look what came next, right? Look what came next. So this is the argument, right? This is the argument of sort of the advantages and the disadvantages of a hard landing versus a soft landing. Someone says, yeah, so we do have, if you're talking about the ITC subscription, we have several different tiers. So there's a free tier, by the way, into the cryptoverse.com. So that costs exactly $0 a month, and we still put out a weekly newsletter, and you get access to, I think, like one chart. So make sure you check it out. Links in the description below. And we do also have several different tiers as well. But again, part of the secret to the Cryptoverse is just surviving, right? It's time. Yeah. So any other questions? Can I explain why certain cryptos won't be securities? I have no idea what they're going to declare as securities or not. I don't think Bitcoin. I mean, I think Bitcoin's a commodity. And that's another reason why I think, Bitcoin, I think crypto portfolios should be mostly limited to Bitcoin right now, because I think the idiosyncratic risk of any individual altcoin carries a pretty high risk that Bitcoin does not carry with it right now, not only from regulation standpoint, but also just from a liquidity standpoint. And we also know that a lot of altcoins don't make it back. You can always go back and cherry pick the few that did. There's plenty of altcoins that will never see all-time highs again, and that's just a tough pill you have to swallow. I mean, it sucks to recognize that. You go back and look at 2013, 2017, 2021. A lot of the altcoins that are around in one bull market are not going to be there in the next bull market, or if they are, they're going to be 100 or 200 spots down on CoinMarketCap. So you have to consider that. I mean, I would say the blue chips are mostly where you want to be. And then, I mean, it's okay to expand out from that eventually, but my personal opinion, not financial advice, is that Bitcoin is a much more attractive play from a risk-adjusted returns point of view than the altcoin market. It doesn't mean the altcoin market can't rally. We've had several altcoin market rallies. We had January, February, March of 2022. We had June, July, and August of 2022. We had November, December, January. Plenty of altcoin rallies, right? Guess what? A lot of them still bleed on their Bitcoin pairs. Not all. Matic has not, and I know that. But a lot of them have, and that's sort of the important point, is that you're losing your Bitcoin valuation. You can often lose your Bitcoin valuation by just holding on to this basket of altcoins. And then to make it even more brutal, Bitcoin normally leads the bull market. So even after the USD pairs, or even after alts have bottomed on their USD pairs, Bitcoin can still destroy your Bitcoin valuation if you're just heavy altcoins. How many people does Into the Cryptoverse employ? We have several. I mean, we have several different people. I want to say, like, I mean, it kind of varies, but I would say it's basically been around 6 to 7 people. It's not. I mean, I'm the only one that's making the videos, but the website that we have here was built by a team of people. I mean, I certainly didn't build this whole thing by myself. So yeah, I mean, we have several different software developers that are, and actually we're going to add an about page, I think, on the website soon, that you guys can see who they are and interact with them. But yeah, I mean, this is it's a lot of work has gone into sort of developing all this stuff, and yeah, so good question. Why don't we wrap it up? I think this was a good show. Um, I thank you guys for tuning in. If you want to continue the conversation with about 38,000 of your closest friends, you can go join the Telegram group. I will post it in the chat. Go over there, talk about crypto. You can follow me on Twitter. We also have the website, intothecryptoverse.com. And with that, I believe we will go ahead and wrap it up. Thank you guys for tuning in. If you're not subscribed, make sure you subscribe, give the video a thumbs up, and let me know in the comments if you like the live streams, if you prefer the live streams, or if you prefer just the usual videos that we do. And I'll try to take inventory on what people's opinions are. Thank you guys for tuning in. Subscribe, and I'll see you next time. Bye.